Before I would start, I would also thank Marilyn, who needs, unfortunately, to leave now, but thank you a lot for this amazing keynote speech, which set the scene, I think, pretty well for the day and also for tomorrow. Very short about myself. So my name is Nicola. I'm the head of retail investing research stream at 2 Degrees Investing Initiative, and the project coordinator of the Level EI project, which is the project which is hosting this event today. And maybe also a short note on Level EI and the objective of the project. So Level EI is the acronym for Level the Playing Field for Energy Efficiency Investments and Sustainable Energy Investments. As we have just heard, those kind of investments are highly needed. I think I don't need to lose much more words on this. However, the problem is that the current inflows in sustainable and green finance apparently don't translate into actions on the ground, meaning that they really trigger energy efficiency measures and sustainable energy measures in the real economy, as at least not in the scale as we would need it. So the question arises, how to impact energy efficiency and sustainable energy investments with sustainable financial products. So the whole day today is dedicated to this question, how to impact the real economy with financial products. So we will start with this panel to actually set the scene. The objective for the panel today is to discuss the basic mechanisms which financial products have to affect real-world change. We will also talk about practical applications of such mechanisms, but also the limitations, especially also around measurement. So in the first workshop, we will build on what we learned in this panel and work on, well, concrete moderators and minimum requirements for impact mechanisms to work. But we will explain more about this later. And then the second part of the day, we will then jump into the very exciting discussion around impact measurement, which is, interestingly, after maybe 30 years of sustainable finance, still in its absolutely infancy. But yeah, I think we, or especially Mickaël, will present you the state of the art in the field, and in the workshops in the evening, we will then hopefully find maybe also some new ideas and solutions how to progress on the field. Okay, enough about the day. Let's now start with the panel. So I would like first to thank the panelists. I'm very pleased to have such an excellent panel beside of me. First of all, unfortunately, Axel from the Impact Company, which is the impact measurement company, impact rating company, not for investor impact, for company impact rating. He could not attend because he got sick yesterday. So unfortunately, he's not here. However, we have still a great panel with Eduardo Chatenoud, who is the head of Benelux at Tikehau Investment Management, an alternative assets specialist with focus on inter alia private debt and private equity. Karina Navarro, the Green Finance Coordinator and Impact Expert at Inpulse, an impact-driven fund manager with a focus on undersupplied markets. And my distinguished colleague, Mickaël Mangot, who is the Chief Scientific Officer at 2 Degrees Investing Initiative. So let's jump into the topic and start with the first question to you, Mickaël, maybe to just set the scene about those ominous impact mechanisms I just mentioned. So what is science telling us about those different mechanisms financial products can use to affect real-world change?
So now we are pretty... So science has pretty well advanced regarding the different impact mechanisms that could lead to a real-world effect of financial investments, I would say. In the very first briefing by Guillaume, he was mentioning two of them already. divestment he was talking about, and engagement. And he was saying divestment is the worst in terms of effect and engagement is the best. I think he was meaning, he was talking only about public markets. In public markets, it's true, there is probably nothing better than engagement. Engaging with companies to make them change their practices, that's true. But then there is the rest of the markets, the private markets. And for private markets, you have a lot of other ways to have an influence on the behavior of companies. And those ways include the direct financing. You can finance some economic agents that would otherwise have very tough times finding funding. So that's in the wording of the science of impact, I would say, it's called to grow undersupplied markets. So you can finance an undersupplied market. That's a way to have an impact. Second way is to provide capital with favorable terms compared to market terms. It's called providing flexible capital. And this is feasible in private markets, but not in public markets. Then there is engagement, as we already said. And finally, a more fuzzy concept, which is called signaling. Signaling is the fact that you affect prices in financial markets, and by affecting prices, you send a signal to companies to make them change their behaviors. So, and it could have an effect, a very, very concrete effect by changing the cost of capital, for instance. If you make prices change in financial markets, then for the next issue, there will probably be an issue at better terms for the company. So it will help the company to grow. So we have basically 4 big families of impact mechanisms that have been widely documented by science, I would say.
Fantastic. Thank you, Mickaël. So, and then maybe the question now to the practitioners. So against the backdrop of those different mechanisms which we can use, how would you say are you affecting real world change with your products you have?
Thank you. So on our side, maybe I will give you a part of our history, because with Inpulse, we have been serving in the last 20-25 years the underserved actors in the financial sector for the social inclusion. So that's mean cooperative, microfinance institution, mainly cooperative banks, and more recently fintechs. So and startups and small and medium enterprises. So with them, we have been creating our internal impact measuring tools, and that mean to reflect in them all our experience in the last 20-25 years. And it has been very interesting in the last 3 years, indeed, to construct these internal tools to understand the needs, their needs, but also how we can measure the impacts created for them, and how indeed we can create this impact, how we can motivate them and orient them to create impact. So the first thing that for us was really very basic, maybe in the basis of this scientific analysis, is indeed to create awareness that they can create impact, because they don't know, they are very open to impact in the sense that that achieving their mission, but they don't know how is the impact, how to measure it. So we help them to understand how to do it, create different kind of tools to measure it. And also for us was very interesting because we try to identify the different kind of ESG criteria, how they can contribute to the SDGs, and we start to create with them this awareness to launch these tools, and to participate with them in the learning and in the understanding of these tools. Go forward to this once we consider that they understand the tools and the purpose of all these indicators, because after to give them a tool with, I don't know, 100 indicators with the different dimensions, social, environmental, because before they were more awareness about the social impact. But when we start to talk about for example, environmental impact, the perception of the climate change and the external environmental impact for them was really a big things to handle. So the second part of this, in all this process of awareness, comprehension, understanding about the impact that they can create and how to measure it and why we measure and follow up these indicators, was indeed to include in the contracts some covenants on some a specific achievement regarding with some indicators of some part of this investment. So we said, okay, we will invest in your microfinance project, in your cooperative, but some part of this, according with our analysis, and our analysis also have this results in percentage and number. But we compare this result with international standards to know 61% of the women in the portfolio is okay or is not okay according with the market. It's good according with the 2X challenge. It's good, for example, the environmental indicators according with the green index in the microfinance sector is good. So we scored the client and we said, okay, according with this, you are very good in the social part, but it's not so good in environmental. So how we can improve this part? So in the contract, we established some agreement. Of course, we are agreeing in both sides. So say you can go forward and you can achieve this indicator and improve this, for example, the number of women in the portfolio, the number of women as a leadership, so in your board of directors, etc. And I think that this has been very interesting because beside the awareness, we are helping the microfinance institution cooperative, this underserved sector, to improve in their understanding, but also to go forward and to consider new ways to impact specific social and environmental indicators.
Okay, interesting. So basically, you would say that it's about serving undersupplied markets by providing capital to microfinance institutions who then in turn provide this money to people. Where are those projects located? Is it around the world or?
Yes, they are in Europe, in north of Africa and the Balkans. Yes. Mm-hmm.
And then also interestingly, I think what we will see also over the day is that also non-financial support can have indeed a direct impact by actually having or providing expertise to the investee to help them grow. And okay, interesting. So same question to Edouard. How would you say is Tikehau using those different mechanisms to affect real-world change?
Good morning, everyone. Thank you for inviting us. The Tikehau philosophy within impact world is pretty simple. We were launched from scratch in 2004. Right now, we manage 37 billion euros, and we are not a philanthropy company. We are an asset management in order to deliver very simply profit for our investors. So our model is a bit different in the impact space. We decided to set up an energy transition fund in 2018. So at this time, it was a little bit less flavor of the month. We decided to launch this because there was a mega trend, the need of an energy transition, hence creating impact. So this megatrend, we decided to invest in this megatrend because we thought there will be a lot of opportunity. And to make it simple, given the Paris agreement, the number is $6,000 billion a year needed in order to finance this energy transition. So the trend is enormous. And our view on impact, coming back to your question, is very simple. We have a mega trend. We want to finance this mega trend, obviously for extra financial reasons. But as I mentioned earlier, we are not a philanthropy company, and we want to deliver returns for our investors. And the way we found in order to be in both parts is very simple, is we want to finance companies that are profitable. So right now, to give you an example, the first fund we launched is a €1 billion fund. So it's a pretty large number in the impact space. We onboarded investors from all over the world. And this fund already has already secured 11 transactions, which is pretty nice. You know, when you launch a fund, you're always doubtful about the idea. Will I be able to deploy this fund? And here we are at the 11th investment in Europe. And we invest in companies that are profitable and that are deploying decarbonization strategy in the SME space. So we have a very robust and virtuous circle created, which means we invest money in profitable company where we provide the additional money in order to grow. So it's a very simple mechanism. Obviously, we need also the support from other part of the impact space with maybe more philanthropy in order, or maybe more venture space in order to finance very early stage company. But here we provide additional capital to these companies active in the decarbonization space. At the end, it's large figures, as I mentioned, €1 billion. We announced that we will want to reach the €5 billion mark in the AUM in the coming years, and we have some ambition about this platform because we think it's very attractive. Separately, we were mentioning how to fuel this impact and how to grow, and here we are talking about our investor base and how to attract people. Obviously, we need to deliver yield or IRR for our investors. I mean, it's as simple as that. So we are just in between providing impact and providing financial returns to our investors. Our view as an asset manager is that the asset management space is huge and there is a lot of money, and we need our mission as a company is to really onboard large and long-term institutional investors to get part of this money in order to finance the impact space and hence decarbonizing the world or having more impact in various spaces. So here is the philosophy behind, and the way for our portfolio company we create impact. As I mentioned, first we finance SMEs, so we put additional money in SMEs that are growing. So this is, and it's we used to say that it's the very top level money that we put that then creates additional impact. Obviously, we like to build an impact consideration when looking at the equity story. We also negotiate ESG clause with the shareholder agreement. So we have many ways to increase the impact for each portfolio investment. And I mentioned earlier, we are an asset management company, so we are reporting to investors. We are not just on our own like a family or like a philanthropist. We are behaving and investing money for third-party LPs, and we need to create many goals, many rules in order to explain to them how their money created impact.
I have a question for you, Edouard. You said many times that you are having an impact because you provide additional capital to those companies, but at the same time you said they are profitable. So what makes you think that this capital is additional? Maybe it would have been financed by any other investor. Actually, it's more complex to get finance when you are not profitable. If you are profitable, it's pretty easy to get a financer. So why are you saying it's additional in that case and not a substitution?
Okay, sorry. So it's a good question, and thank you for the debate. First, it's additional because we put the extra money. So we participate. It's a fact. I mean, it's I'm not. We are. Yeah, no, for sure. No, but it's at the end we participate in a share capital increase. So it's really the extra financial money put in the system of a company. Like we are not investing on the secondary market. We invest in share capital increase. So we add new money in the system. That's what I wanted to say when I speak about additional money. And obviously, and that's the second part of the question, which is very interesting. Obviously, money can always be replaced. I mean, it can be your money, as you mentioned, my money, and there is no problem with that. What we think here, I'm not speaking about impact, is a mid-cap space. So what we call from 20 to 200 million euro is a pretty, let's say, unique market, because we always like to say, if you want to borrow 500K to your bank to purchase a flat, let's say it's easy. If you want, as a large company, to borrow 5 billion euro on the market in order to refinance your bond, it's pretty easy. But if you want to find 30 million euro on the market and you are a SME looking to finance, let's say, a new capex or a growth story, here it's a bit more complex. And I can say to you, and this has nothing to do with impact, I can say to you, we are managing the Belgian Recovery Fund here, which is an initiative to finance SMEs, nothing to do with decarbonization. We have opportunities. Why? Because sometimes it's too risky for banks, it's too expensive for shareholders, and they don't want to be diluted. So we don't say that we can deploy 10,000 billion euro on this, but we can. I mentioned earlier 5 billion. We will find road to invest this kind of money. So this is answer one. And answer two, the fact that you have a profitable company, the fact that the business model is proven, is a pretty good evidence that there is an impact. So that means that the model is flying. We don't want to finance. Yeah, it's already flying. And you know, I said earlier also that we want to attract new investors, the new insurance company, new pension funds. If we invest where there is a technology risk or a policy risk, let's say, then it's a bit weak for a financial investor. So we don't say we can address everything. We say we can address something by bringing some institutional money on the table. That's it.
That depends, I think, on the sector, because again, on our case in the microfinance sector and the very small SMEs, for example, we have including a very important package of technical assistance indeed oriented to help these microfinance institutions, this sector, again, to understand how they can create impact, how to measure it, to understand our tools, and again, to go forward. If they have a social mission, an environmental mission, how to measure it, how to monitor it, and how to report about it. Because, for example, we also report, and we are aligned with the SFDR to report about our financial, but also our impact. So this is the first part, the technical assistance. So we think that with this package, with this different kind of technical assistance tailored to each institution, because it's not like a standard package. It's really developed with each institution according with the needs that they have, according again with the analysis that we did about the different kind of dimension of impact. And we in Inpulse, we have 4 funds managed directly, and one in partnership with Funds for Good. It's a recently launched, the name is Impact EU. It's a very beautiful fund, and this is an impact fund that indeed we established a key impact indicator from the beginning to achieve at the end of the fund. So that means social and environmental impact that we established already for the kind of invested final beneficiaries that we want to have, and we achieve. We already are committed with this indicator. So we know that at the end of the yes, for example, a number of women in the portfolio, and others environmental regarding what, for example, we have a clean transport. So how many budget we can dedicate it to this kind of projects. So yes, I think that with this also we can we expect it to create a direct impact.
Yeah, actually, Karina, you're also today here to tell us a little bit more about a new product which you will launch, which is very interesting, a green impact product, which will focus on sustainable energy project financing. So can you tell us a little bit more about the product, how you find those projects, how you select them, and which role you play between the project issuers and the investors?
Really, it's a project in conceptualization. We didn't launch it already, still, sorry. And this is a fund for the renewable energies and energy efficiency projects developed by the small and medium enterprises. So the idea is really, again, to have this new clean energy fund in the family of funds for Inpulse. But we are in the conceptualization process. After all this understanding of the microfinance sector and the needs of the smallest in the sector, we think that we can apply all the experience that we have in this sector, but also in Europe, to try to develop and to help these small and medium enterprises to participate in the decarbonization, because despite that this is an important sector of more or less 98% of the representation of the enterprises in Europe, less than 10% is dedicated to them, to the decarbonization projects. So it will be a fund for project finance. We are looking for, in this moment, for investors, for partners to continue in the development, because it is in the conceptualization. But already we created, you know, the theory of change, the framework of the impact, the direct impact, the indirect impact, the association of the contribution with the SDGs, some key indicators also to achieve regarding with the reduction of emission of CO2. Again, the women inclusion in the renewable energy sector. So it's a very beautiful project, but in the moment it's a project, and we are trying to identify some anchor investors and to talk with them, and we will see in the future, because indeed this will be for the very small developer projects and a small and medium projects. So that means from 1 million to 5 million to 7 million. So it's a little bit frustrating, to be very honest, when we try to identify some sorts of funds for this fund, and you see that there are a lot of money, but for big projects and for big funds. And we say, but it's a little bit, yeah, because again, 98% of the economy is handled by the very small and medium enterprises. And we think that they need support, they need money, but they need also the financial structure support. So for that reason, we think that the institution as Inpulse, as this new possible fund could help them a lot, because they maybe understand the technical part, but they don't understand the financial, the back office, all the technical procedures, the financial procedures that they have to have. We know about them. We know about the ESG, the SFDR, the different key environmental impacts, and how to measure it, how to follow up them. So, yep, it's amazing that they have a lot of money, but not money for the smallest one in the sector. So we are in the process. And we think that we have a very beautiful project again, because we have all this conceptualization and experience to have to, you know, to go forward, only to have the internal impact tools, to go forward to the tailored technical assistance, to create like a impact fund with key indicators to measure in the future and the advance of this. So we will see in the future.
Did you get feedback for the reasons why investors are reluctant at the moment to get involved in this?
Yeah, maybe there are more interest on the equity and not on the debt, and we think that for us the idea is to create like a fund with these two pockets, debt and equity, because we think that for the smallest equity, it's not possible. They need this part of that and some money also at risk. Yes, I think that maybe the sector, the big financial sector, is more focused on the secure projects, on the renewable energies, and also the biggest projects. But we think that, and we identified this gap, and it's interesting that it is there. But yeah, we are in process to understand the market and how to achieve and how to convince the biggest one that the smallest one needs also and can also participate in the decarbonization, and it could be really very interesting because they can create another kind of technology.
Interesting. So maybe this question to you, Edouard, but also to the audience. I don't know whether anyone else had experience with project finance so far and can share similar limitations to find investors for such projects. Edouard, did you face similar projects, or are your investees just much larger than small renewable energy projects, I assume?
So our portfolio companies are only large companies. So as I mentioned, we have for our first vehicle, we invested in 11 companies. One company is producing biogas in Spain. One company is producing electric engines in Italy. Another company is an engineering company based in Ireland. So we have very various companies, business models. The three of them, all the companies are, let's say, having an impact on decarbonization. So when we talk about decarbonization, it's low carbon mobility, green energy, and efficiency of the grid in industries and in buildings. So for example, we invested in a company called Groupe Union. Groupe Union is active in providing, let's say, insulations for buildings. And it's a very old company, but now having an impact. So here is what we are facing. Obviously, we also are doing impact investment in other space, like in the credit. I mentioned private equity because it's the famous, sorry for the famous, but the famous additional money. But we also do credit, which here we finance companies active in the energy space, but we finance them only. So it's let's say we have an impact because we provide additional money to companies, but it's not the ultimate money. And we also are active in the real estate space where we invest in buildings with let's say a passive role. with regards to decarbonization. So here is what we do. We don't finance a very small project or disruptive technology because we believe some other people can do it. Here, we really want to make the bridge between institutional money and this kind of impact.
Can you tell us a little more about the impact loans?
Yeah, so we have a vehicle called Tikehau Impact Lending, which is already around 300 million euro. We invest at more than 5% yield, and here it's duplicating what we see in the private debt space. At Tikehau we manage 14 billion euro in the private debt space. So private debt is a word to just say that it's loan provided by non-banks. So a loan provided by an asset manager, and a loan is we can do two kinds of loan. To make it very simple, we do acquisition finance. So here we are helping a company to purchase another one. So this is acquisition finance, like when you purchase a flat. And separately, we do corporate financing. And here we finance directly a company that could or should or that may have been financed by a bank. So here is what we call private debt. And overall, we manage right now 14 billion euro in Europe. So it's tiny numbers when you compare to balance sheet of large banks in Europe. But as I said earlier, we find ways to deploy this money, hence providing a nice investment products for insurance companies. And we indeed decided to duplicate what we have done in the energy transition space on private equity in the private credit landscape. And here we are providing this money coming from insurance companies into the mid-cap space again, providing extra leverage to make it simple in order to develop themselves.
You also just mentioned the financial performance of your transition fund. So I would be interested in such a relatively huge private equity fund. What can we expect in terms of revenue volatility?
So for the LPs, for the financial investors. So here we as a firm, we have a strong view that we need to have an alignment of interest with our LPs. So first of all, we as a firm are the first investor in the fund. So that being said, it underlines again that we are willing to have a nice financial performance on our investments. The targeted IRR for the private equity fund is a classical private equity return, which means around 25% IRR. So, and this is what has been achieved on the first two transactions. It's nice figures. We take risk, obviously. So it's and here we benefit from various positive things on our investment. The first one is the mega trend. I mentioned it earlier. Second thing is the mid-cap space, where let's say that the competition on assets is less important than on very large transaction on very small. So we are, I don't say we are alone, but let's say there is not so many players. So here we are able to invest in what we call attractive conditions, and we also are able to invest in attractive conditions thanks to the ecosystem we created, and enabling the company to be, let's say, a part of an ecosystem in order to grow. So what we think is that we as an investor, we need to provide the value in our investment is not only the financial price, but also what we bring to a company. And obviously it's very important. And we had many times a case of a company thinking, okay, I want to be part of this ecosystem and I want to grow thanks to the ecosystem. Obviously, at the end, once again, it's a virtuous cycle, because you build a stronger ecosystem, then you are able to attract new companies. And here is the way we want to behave and the way we want to grow. So obviously nice financial returns, and we don't want, let's say, to be complacent on the financial returns, because if we are complacent on the financial returns, and we won't get any additional investors, we won't be able to grow our platform, hence we won't be able to provide impact. That's really our mindset. We don't say we don't need sometimes the support of policy. We don't need the support of philanthropies for some part. Obviously, we can't address everything, but on our case, this is our model.
I have a question for you, Edouard. At Tikehau, do you use an alignment of the carried interest of the general partners on impact metrics? It is more and more common. Do you use that at Tikehau? You do that? How do you? What's the fraction of the carried interest that is indexed?
I don't have the figure, but at the end, if we don't realize some ESG goals, there is a part of it. I'm sorry, I don't have the figure in mind, which is given to a foundation. So, but also keep in mind at Tikehau, the performance fee is shared with the investor, with our shareholders. So it's something less material for each individual and for the fund manager. We share everything with our shareholder. But indeed we have we put in place something which is punitive in case some ESG metrics are not met. And yeah.
You know, I was just asked to speak also on the mic. So we heard now how well it works actually at Tikehau to allocate impact money, but I would be also now interested in also the limitations and barriers you face. It can be maybe legal or also methodological when it comes to impact measurement, for instance. Can you tell us a little bit more about the difficulties you are facing?
So difficulties about investing?
Yes.
Well, as I said earlier, the major difficulty is to deploy a fund, obviously, and to still have impact, and and to deploy it with nice financial conditions in order then to be able to continue the story. So that's a bit the business model of an asset manager, is to build let's say a consistent growth on our various investments. Obviously, here the idea is to remain disciplined on pricing, also to remain disciplined on impact of our investments, because we obviously it's a bit more now flavor of the month, and we can see that a lot of people are acting in this space. So the idea is to have also a real impact on decarbonization, also on the other items such as biodiversity. We want to focus on other items than decarbonization, even though it's a very important Earth limit. So here is a bit my answer. The measurement. So we have an impact ESG committee within the group. We have our head of climate is reporting to the two founders directly. So there is a direct access to the top management of the company in order to be sure let's say the climate and the ESG impact overrule the other spaces when it comes to impact and obviously let's say focusing on delivering extra financial returns. So that's step 2. And when we talk about portfolio companies, we set up in the shareholder agreement ESG metrics that then we will test on the life of the company. Once again, the main answer on what we do and the way we see the world, and it's a bit an easy answer, but we are a third-party asset manager. So when we talk about fundraising, we have to demonstrate to these LPs, which are very sophisticated LPs, how their money will have an impact. So obviously, the more rules, the more metrics we create about that, the more we will be able to develop our platform.
Yeah. But that's kind of, I would say, the holy grail of all this impact measurement discussion, how you as an investor can measure your additional impact on the investee. So not measuring what the investee is doing and how it's changing, but actually with your, let's say, provision of flexible capital, how do you can measure, you know, your part of the change in the company? Do you have any measures in place or frameworks developed to measure the investor impact?
Try to have a view on the decarbonization we create. So we have a figure at the very end of how we decarbonize, and we have some parts which are easy. Obviously, if we are talking about your portfolio company building electric engines, it's very easy if you think about new electric vehicles. If you talk about our company active in the development of solar panels and also fridge doors, here we can have a real easy impact because we provided additional money, allowing the company to secure a new development program and hence reducing the CO2 emissions. So here we provide indeed an impact report to our investors about the CO2 destruction or the CO2 impact of our portfolio companies.
All right. Yeah, I think, Karina, what would be also interesting to hear about, because we just heard that that's actually the approach many investors are doing, measuring the investee impact. But it does not tell us what your contribution is as an investor. Let's say a company increase its renewable energy by 100 megawatts. And you, let's say, provided a few billion of euros in your fund. How much can you say did you now contribute to the change of capacity increase? And that's like the holy grail in this impact measurement discussion, which is very difficult and maybe impossible. That's a question we will address in the panel later or in the keynote from Mickaël. But I think what we can see in our literature review is that in the social sciences and also in the philanthropic place, there are already more sophisticated investor impact measurement frameworks. So you, Karina, used also an interesting approach to measure your investor impact on microfinance borrowers. Can you tell us a little bit more how you, about this project, about this impact measurement project?
Yes, as I told, I think that we are trying to go forward to the first part was to understand the key indicators, the most important indicators, and also the indicators that could create a value, because if they don't have the information and they cannot provide the information, finally the results were not representative, significant. So, but indeed, when you talk about the limitation, that was one of the most important ones, that they didn't have the information, they didn't have the data. And we think that in that sense, we also create like a impact, because they are awareness about the important, but also they understand that they can measure it, and that in that way they could follow up the improvement of that impact. So, and another limitation in this kind of measure, I think that is also the comparison with the standards, as I said. I think that it's not only important to give like a rough number for the institution and for us, but to communicate, to report that to the society, that we are doing that, and how is the result in comparison with the international standards. Sometimes that represents a limitation also because, for example, in the case of the contribution of the SDGs, as you already know, they are a very big standards, international standards, not associated with specific sectors. And the understanding of them and to try to apply them to the clients that we handle, the smallest one, was also a biggest challenge, and to access to financial to grants to help the investees to improve the impact was also a limitation. But all this is part of the measure, and finally to say, okay, we can establish a key KPIs to follow up and to try not to measure what is our investees doing, but how we can do it better as a fund manager, and to try indeed to have impact on the carry, and to say, okay, we cannot receive some fees as fund manager if we don't help our investees to achieve this. So it's another level. As you can see, it's important to emphasize on this because that depends on the sector. In the microfinance sector and under sector, this process are important, but now after that, our experience and the experience that we help to develop on these clients, we can say that we can go forward and to impose to us, indeed, this key indicators for the new funds. And for the fund that we have in mind, it's a fund of 110 millions. So it's not billions, and it will be really very small. And indeed, despite of this, we would like to structure it like a impact fund. And the big challenge is indeed, I think that this could be in two levels for us as a fund manager of this kind of project, the smallest one, that implies a lot of transaction costs in the development. So for us to achieve grants and to achieve obviously the money for the development of the fund, but also grants for the investees or the clients that we will have, because we wanted, or we structured like a very important program, technical assistance program from the beginning to understand, okay, this small developer have a very beautiful project, but it's not measured, because indeed we are talking about, again, about the very big funds that with the very big developer projects that have all the knowledge, etc., and are very mature and bankable, but maybe are others that have a very good idea, but don't have this level of maturity. So we thought that they need technical assistance in that moment. And in that way, we think that we also create impact, but because we are not saying that we are going to invest them because they don't have this level of maturity, but we identify that they are good, we locate that we want, and we expect in the future to locate some money to them to continue developing this project, and then go forward with the investment. And then in the investments, post-investment, we plan also to propose a technical assistant oriented to this kind of developer. So as you see, for us, the comprehension of the impacts is in another sense. It's not only how money we can give to them and how money we can cash to them. It's more how we can create to develop this ecosystem, you know, because indeed part of the analysis that we are doing for the development of this fund is the index of energy poverty, and to try to identify like a priority of the financing in the future of the countries and the projects developed in each country based on this idea of the energy poverty. It's another idea, you know. It's not how many money how we can have in the future. Is how we can indeed to help to develop this ecosystem. And this implied a lot of challenge and limitation for us as a small fund manager, because we want to create impact on the smallest one, but this implied a limitation for us and also for the developers. So, but one key thing will be indeed the grants to help them to improve the project that they have in mind.
All right, fantastic. So now we would have another 10 minutes for questions from the audience. Or also if you have any inputs in terms of limitations you faced in your projects, or even better ideas how to overcome those. Now it would be the chance to raise your hand. Any comment or question from the audience?
Hi, Jim Whittington from Dimensional Fund Advisors. So, Karina, I wondered if you guys are making concessionary investment. So in our view, all companies have an impact. We're a public markets investor, we invest in companies, and as an investor, those companies have an impact. But I think, as Mickaël was saying, what we're trying to identify here is when you're having additionality, when you're generating impact, you're not just aligning with impact. And in terms of theories of change, making a concession is an important part of that. If you're just a profit maximizing investor, that's just capitalism. It's not necessarily impact investment, that's just investment. So from what you were saying, my impression was that you're a concessionary investor. Is that correct? And if you are, what are the challenges in attracting those types of clients that want to invest in those types of funds?
Do you mean for the future green fund that we are in the process to consult?
Yeah, any of the funds you were talking about, the energy poverty.
I don't know if I well understand your question, sorry, but if you mean how we identify the clients, yeah. Yeah.
Says maybe you are a concessional investor, so you accept lower terms than the market terms. But is it a problem for you in that case to attract clients?
Attract investors. Yeah. And we accept to have, I will understand your question. We accept lowers indeed ERR and carry. And for that is difficult play because indeed to attract investor with this kind of concessional investment is not so attractive, but at the same time we tried, and I think that is the difficult to try to show them the impact that we can create, and at the same time indeed it could be difficult for some kind of clients to identify some kind of type of clients, because yes, maybe some of them has some governmental supports, and some of them are a little bit lost because they don't understand that they can be this kind of funds that support them with lower financial requirement, but at the same higher extra financial indicator. So it's a little bit difficult because I think that a different concept is not a traditional concept like the biggest to the biggest is the smallest to the smallest, but it was the same for the microfinance sector. So for this reason, we think that we can in any way to migrate the knowledge that we have for them here, but indeed we have concessional funds.
Just to build on your question, it's clear that in the impact landscape, we have two types of investors, the concessional ones and the non-concessional ones. But to be honest, you don't have to be concessional to be impact investor, because you can have impact through other ways, like engagement, for instance. So on paper, at least, it could work to be non-concessional and still having an impact on paper.
Yeah, but because we are obviously, I think also the answer is a bit in between. That there is, if I want to provoke a bit, obviously, if you are concessional, then that means the impact investment coming from institutional investors will be very tiny, because they don't Yes, smaller, because the people, they have some fiduciary duties for their pensioners, and they have some fiduciary duties for the real people behind, and then you will have impact investing that will be coming at with small number. And here, to provoke, I would say we need indeed the opposite. If we really need 6,000 billion a year coming from institutional money, institutional investors, then you don't have to be a concessionary investor. That's step one. Step two, obviously, when you are in a very robust, resilient, and impactful company, obviously the pricing are a bit different than in a non-impact company. Today, when you have companies really behaving in the space, their valuation is very important, and you still enter because it's a great business going on. So that's why I would say the answer is a bit in between. I mentioned also our private credit space. Obviously, we are very happy to finance company having an impact. And so I don't say how much do you have a decrease in the rate because there is an impact, but for sure there is kind. I was mentioning earlier the Belgian Recovery Fund we are managing. We are financing SMEs. Obviously, if we had a vehicle managed for LBO financing, it's not exactly the same returns than a fund managed with 100 million euro coming from the state, from the federal state. So you know that you have a kind of mission behind in order to be impactful. So that's where the answer sits in the middle. But for sure, we must really clearly not lock the impact investment in philanthropy. That's I think a huge I don't know if it's a mistake, but for sure we need to unlock the savings and to bring them into the 6,000 billion a year. And here we really must not lock this impact space within the philanthropy.
There was also a comment here, or also some other questions. Maybe first, is it directly to what has been said, or another question? Okay, then please, where? There's a question here. Or comment.
Hi, I'm Edouard from the European Commission. Just a question to both of you, Edouard and Karina. I mean, my understanding is you're helping companies grow that are in the business of decarbonization. Now, to what extent do you look into decarbonizing companies themselves? So production lines, basically reducing the energy consumption and helping them shift to renewables in their own activities rather than growing the businesses and selling energy efficiency or renewables to others. And would that be, I mean, are you looking into that? What would it take for you to do that?
The answer is clearly yes. We have a view on, let's say, a holistic view on decarbonization. So the idea is to finance companies having an impact on decarbonization, whatever the mean is. And indeed, we have various portfolios company. I mentioned biogas companies. I mentioned Groupe Rougnon, which is but also Green Yellow. Green Yellow is a company that is installing for clients fridge doors or.
What is your impact to decarbonize the activities of a company that's whatever, a freight transporter or a data center? To which extent do you go into helping them invest not in other people's energy efficiency, but in their own, which is pretty different?
Yeah, well.
And that's also to Karina in a minute.
Yeah, in our case, we are targeting projects, for example, developed for small and medium enterprises for example, the decarbonization or reduce the consume of fossil fuels energies for the prisons, schools, and or small and medium enterprises that want to reduce their consume of electricity. So the idea is to tailor this kind of really impact projects with and the beginning will be this screening the projects that will impact the society, but itself the small enterprise. So again, maybe the concept is different because we want to create this fund like a very impact fund oriented. So the type of our projects that we will screening, we will select, we will have to create this impact. So again, it will be difficult because there will be some kind of client with some kind of project that again, that could be a consortium of a school. So a project developer that want to develop I don't know, a solar rooftop project for reduce the consume of energy. So it will be like yes, you would reduce the consume so that it will be implied reduce of your bills and the reduce of emission of CO2. So a very specific project like this, again, we tailor like this, or we target these small projects from 1 to 5, 7 million, when a fund from 110 million. So it means more or less 20 projects with a technical assistant from the beginning to the end. So yeah, that the client of that type of clients, and we think that maybe again, the contribution to the decarbonization of the economy in sense of amount of CO2 in comparison with a very big project will be not representative, but you know, the development of the ecosystem and also the development of the ecosystem in sense of society, you know, how the society, how the small and mediums can create this one and can involve the community to develop this one. So again, it's another concept with many complex elements, but we think that in this way we could create an impact. It's not only the amount of money, it's and the amount of CO2 emission is. Again, how we can create and contribute to this ecosystem, and maybe this complexity, and it's one of the limitations, Nicola. This level of complexity can create a limitation for this kind of fund, because when we want to, or we are doing all this process of fundraising, it seems that this complexity is not like you know, like a good way to do it. It seems in the biggest, it's like it's better to do it as simple as possible, as linear as possible, and it's a little bit frustrating because for develop this kind of ecosystem, you need, for example, to have partners, because a small fund manager as us is obviously it's not possible to develop all by ourselves. But we have all this experience in the back office and the front office in financial issues. So yes, that implies limitations and they're looking for the fundraising, and but it's the way that indeed we think we can create impact.
Maybe just to add on our side, we have portfolio companies active as a consulting company. So, okay, for example, Carbon Crawley go down into industrial companies in order to reduce their impact. And here they are, or the more they are impacting, the more they are profitable, and the more they do additional business on the decarbonization space.
All right. Anais, I just saw we are a little bit over time, so I guess it's time to wrap up. Yeah, so thank you a lot to the panel. I really enjoyed the discussion to get those practitioner views in particular. So thank you to both of you. Yeah, also to you, Mickaël, of course, but we will hear much more from you today. So, but